Hello, good morning, ladies and gentlemen. Good morning, good afternoon, good evening, depending on whichever part of the world you are tuning in from. I'm so excited, grateful for life, and glad to be with you here this morning. So, as usual, let's confirm that we are good to go this morning. So, if you can hear my voice clearly and you can see my screen, please let me know in the comment section that things are going on well by typing in I in the comment section. All right, so I would like to see some feedback in the comment section. Let's see if things are going on well and as expected before we kickstart the session. So let's see what we have here. Okay, I can see Adam 2020. Good morning. Thank you very much. 3769. Which one? Okay, 6338. Hey, Carrie, good morning. Thank you. Brother Ed, good morning to you. Thank you very much. 83917. I see your compliments. 6190818. Good morning to you too. So I take this as a confirmation that we are good to go this morning. And it's on this note I welcome you to yet another promising edition of the Extreme Speed Life. My whole name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be diving right into the financial market using simple technical parameters such as trend lines, key levels, and of course, chart patterns to uncover valuable insight into the historical price movement of all the financial assets on our watch list for this week. Well, so far so good. We have been monitoring four major financial assets, which are the US All Spot, the US Tech 100, popularly known as the Nasdaq, and the GBPUSD, and of course the XAUUSD, popularly known as the Gold Spot. And in the last 24 hours, it has been quite a mixed reaction as we had some significant traction in some of the assets we've been monitoring, while we have been noticing some consolidation phase in the order. So we are going to be reviewing all this together with the utmost intent of strategically positioning ourselves ahead of the New York session. Now, for those who are joining us for the first time, you might be wondering what this is all about. Well, this is a forum where we all come together as a community in anticipation of the New York session, where we come to review our existing position, existing trades, and at the same time strategically position ourselves ahead of the New York session. We do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and I advise you to stay tuned in through to the end of the session and try as much as possible to be part of our subsequent editions, as the more time you spend with us, the better you become in understanding how things works here, and eventually be able to use the information you have gathered here to make your own independent trading decision. So once again, I welcome you all on board. So with that being said, here we are going to be diving right into the business, and as usual, the first thing we are going to be doing this morning is to check on the economic calendar. And for those who have been with us for a while, you know how important this is. As you know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns, hereby giving us adequate knowledge to position ourselves in such a way that we can capitalize on any potential trading opportunity prior, during, and even after the event. So, with that being said, here, I was able to pull out a couple of medium impact events. As you all know, we focus mainly on high impact event coming in from the economics that affects the financial assets on our watch list. Of course, for this week, we have the US economy, the Japanese economy, and of course the United Kingdom's economy. But since there were no high impact events, so I took it a step further to include the medium impact event, as we really want to have an idea of what price action is likely going to do, and you know how these fundamental factors often have a reflects a specific technical patterns on the chart. Now, the first medium impact event today is coming up in about 2 hours from now, and that is the speech from Akar. Akar is the 11th president and chief executive officer of the 3rd District Federal Reserve Bank at Philadelphia. So he is also an alternate voting member of the FOMC, which of course you know, whatever he says here will give us a little bit of insight into the monetary policy of the Fed and of course the health implication of the United States economy. Then we also have banking, who is going to be speaking to in about 2 hours 30 minutes from now. Banking is the 8th president and CEO of the Federal Reserve Bank of Richmond, and is also a member of the Emory University Board of Trustees and a former member and chairman of the Federal Reserve Bank of Atlanta. So he's quite vast, and of course, whatever he says to will give us an insight into the health situation of the United States. So, with that being said, here, let's dive right into the business for today. So, as usual, the first asset on our watch list for today is, of course, going to be the US All Spot. And on the US All Spot so far this week, we have been quite profitable on this asset, as you will currently have a minimum of 2 positions running in profit at this point in time. So I would like us to run through quickly what we saw during the live session yesterday that incited the idea of selling the US All Spot. Now, if you remember vividly, we had this situation here where price was initially confined within the $82.85 level and the $82.20 level to give us a 65-cent range, which also emphasized the level of indecision during the first, I think, 8-10 hours of the beginning of the week. And you know how we do it whenever we have this kind of simple flat channel. We want to either see a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in addition to that structure there, we also noticed how the $80.85 level had become a major barrier for buyers to push price to the upside. And in fact, we saw selling pressure resume around that area despite the strong impulsive move last week, Friday. And during the early hours of today, we saw how buyers were incapable of breaking out of that structure, which was the second attempt in the last 2 days. Now, with that situation here, if you recall vividly, I made mention that we might likely see price action transition into a reversal pattern in the form of a double top structure, where we shall be using the $82.20 level as the neckline for that reversal pattern. And to validate that reversal pattern, we would need price to break down retest the neckline to be able to join a bearish move to the downside. And proud to our live session yesterday, I told us all that I already have a sell position triggered as soon as price broke down the support line of that range. And one thing I said here yesterday is that for those who had missed out on this opportunity, that we want to remain patient for new structures to mature. And one of the things that we said we will be looking out for is price coming back to retest the structure that was broken yesterday to inside a downtrend continuation. And of course, this was exactly what happened as we saw price come back into the structure, retested it multiple times to give us a sign to join a bearish move. And remember, we also identified this level at the $81.52 area, where I said if price breaks down both of these levels, we will be adding more position to our existing trade. So it has been quite an interesting 24 hours, and for those who took advantage of this opportunity, in fact, if you are taking only one position, you should be having over 195 pips in profit, while the second position is another added 128 pips in profit. So right now we have roughly 300 pips in profit minimum on the US oil spot so far this week. So it's quite a very interesting 24 hours and a good start to the new week. So congratulations to everyone who had been on standby to capitalize on this move. Now, with this being said, the next thing we want to be doing, as you all know, the next thing we want to be doing is to move all stop losses to secure this current sell position. And while we are trying to secure this position, remember we also want to give enough room for price action to breathe. And one of the I will be advising us to do here is to move all stop losses into that area between the $80.95 level and the $81.40 area. We really do want to give enough room for price action to breathe, as we might see price do some retest before the downtrend continuation happens. So let's ensure we have enough room, secure the position, and let's see how to position ourselves ahead of today's trading session. Now, with the situation we have right now, it is clear that the week has started on a very strong bearish momentum. Now, the question at this juncture is this a retracement of the impulsive move we witnessed last week, or is this going to turn out to be a sell-off in this particular market? Now, the first thing I did this morning while trying to dissect where our next line of action will be is to acknowledge the fact that price has been bearish, hence we have lower highs in this market. And whenever we identify lower highs, this is a clear sign that bears are taking over the market. And after connecting the series of lower highs, we have a beautiful descending trend line, which we shall be using to guide our trading activities, at least for the later part of this week. And one thing about our descending trend line is that as long as price remains below the descending trend line, we shall feel comfortable in our sell positions. Now, let's zoom out a little bit. I want to share with you something quite interesting on the structure. Now, if you look at what happened from Thursday of last week trading session, we saw this phenomenal bullish impulsive move that brought price into the $82.85 level. And one interesting thing about that bullish move was the fact that it broke out of that $80 barrier, the benchmark for OPEC Plus members, which they want oil prices to stay as a support line for the oil prices. So we saw the breakout of that structure, and we all know that from a technical standpoint, whenever price action breaks out of such a structure such as this one here, we are likely going to see some retracement happen where price may come back into the structure, and the appearance of buy pressure around or above that structure could incite an uptrend continuation. So this is one of the conditions I'm looking out for on this current market structure. Now, like I was saying earlier, depending on how price action reacts to the $80 mark will determine what our next line of action will be. So we are going to remain patient here, especially for those who had missed out on this sell position we have here, and wait for new structures to mature at this point. So let's see what happens around the $80 mark. Are we going to have buy pressure resume again to incite an uptrend continuation, where the breakout of that descending trend line we identified earlier will confirm this uptrend move? Or are we going to have a situation where price will break down the $80 area to incite a sell-off in this market? So you would agree with me that we are at a crucial point if price gets into the $80 area, and whatever happens around that level will determine what our next line of action will be. Then one more thing I would like to state here is that even if we start seeing reversal pattern around this area, like a double bottom structure, we can capitalize on that move. And if price gets into that zone between the $81.50 level and the $81.20 area, which of course also shares a confluence with that descending trend line, we should ensure that all stop losses are moved to secure that counter trend opportunity, as depending on how price reacts to the zone and trend line will determine if we are going to be adding more buy position. So a breakout retest will welcome buying opportunity, and if continued selling pressure resumes below the structure, that is, buyers find it difficult to break out of the trend line, then we might be in for a downtrend continuation. So let's mark these levels out on our chart. Very, very important, as we shall be needing them to guide our trading activities for today. So this is my view here on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. And in fact, you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activity today. All right, so I see some handful of comments here actually. I see comment from Nikki74. Good morning to you, Nikki. How are you doing? 2799, good morning. 22950, Dino, Ditch 52, Valeria, Nes57, 8603, and of course 09701. Thank you very much for checking in on us and getting involved in the comment section. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next financial asset on our watch list is the USTech100, which is popularly known as the NASDAQ. And yesterday we had a situation here. Hold on a little bit. Let me extend this out further so that we can have a clearer perspective into what we are going to be talking about today. So these are the very important levels we identified during our live session yesterday. And one interesting fact here is that price still remains below our key level. And you know how we use our key levels in this community. As long as price remains below the key level, we want to look out for patterns and structures that will support the idea of selling. Now, let's run through what really happened during our live session yesterday. What did we see? So, at the beginning of the week, we noticed that price action was caught within a range between the 15,360 level and the 15,285 level, giving us an insight into the level of indecision at this particular point in time. And one of the conditions we look out for whenever price action falls into such a range is for us to remain patient and wait for price to either break out of the resistance line for an opportunity to buy or break down the support line for an opportunity to sell. But prior to our live session yesterday, we begin to notice continued buy pressure around this level at the 15,325 area. And coupled with the ascending trend line we identified at the beginning of the week, we said as long as price remains above the ascending trend line, we shall look out for opportunities to buy. And in fact, if you are taking advantage of this opportunity here, we saw our price moved about how many pips? About 60 to 70 pips in our favor before this bearish momentum began. And if you had followed our instruction, as we all say here, that whenever price action moves significantly well in our favor, we want to be moving our stop losses to secure the position. If you had moved your stop loss, you must have been taken out with a modest size of profit or at a worst case scenario, break even. Then I also mentioned here yesterday that if price breaks down, retest the structure will give us selling opportunities. Some of us took advantage of that opportunity, but it didn't last long as we were taking out of that sell position. So it has been quite a choppy situation here on the USTech100, as we have seen right now that the range has widened a little further into the 15,400 and the 15,285. So we have a very huge range right now, as this further emphasized the level of indecision in this particular market. And you know how we do it. Whenever we have a flat range like this, we want to wait for either a breakout or breakdown of this range to give us an opportunity to trade. Now, if we take into consideration what has been going on since last week, and to do that, I would like us to scale up a little to the upside, to the higher time frame rather. And to scale up to the higher time frame, let's go to the 4 hours. I think the daily time frame will be most suitable for this explanation. So on the daily time frame, let's refresh our memories on what we saw here at the beginning of the week. Now, the first thing we noticed on the daily time frame is the fact that price action has been very, very bullish. And to further emphasize this bullish momentum, I was able to connect a series of higher lows. In fact, we have a couple of trend lines here. You see, we had the first one here, and then we saw the deviation from this first trend line happen in the month of May, giving us this new ascending trend line, which is finally broken during the course of last week's trading session. Let's zoom into that structure and see what is really going on here. So if we zoom in right now, you will see here that that ascending trend line was broken last week, which was the first time price will break down that ascending trend line in the last 2 months, 3 months, I think, and giving us a sign that sellers might likely be coming in. And from a psychological perspective, you know, whenever we have key players take advantage of a very huge bullish momentum, such as buying at a very cheap price, let's say around the 13,800, at a point in time, there will be this tendency for profit-taking activities. And when profit-taking activities reflect on the chart as a retracement of the impulsive move, so now that we finally saw the breakdown of this trend line, are we going to see a situation where price will drop into the major ascending trend line or break down the trend line for a sell-off. So with the situation we have here, so yesterday we were able to spot a reversal pattern around the structure. Now look at this closely. We saw here that as soon as price action tested this peak at the 15,950, we saw a sharp rejection from that area. Sellers negating the barriers, negating the buyers' attempt to break out of that structure. Then we saw price come back again, but unfortunately for buyers, they were unable to break out of the previous high, hereby giving us a lower high to work with. And if we look at this from a technical standpoint, we have something that looks like a reversal pattern in the form of a double top structure. And you know how we do it in this community. As soon as we identify a potential reversal pattern, the next thing we want to be doing is to identify a neckline which we are going to be using to validate that reversal pattern. So we would need price to break down, retest the neckline to confirm that truly we have a reversal pattern on the table. Now with the situation we have here, looking at what has been going on here since last week Wednesday, we finally saw the breakdown of that neckline at the 15,400. Now the question here is, will this breakdown hold for a bearish opportunity into this area, or will the breakdown turn out to be a false breakdown where we will need price action to come back and retest the ascending trend line that was broken to incite a sell-off in this market? Now, to have a better perspective into what is going on around and below that neckline, we would need to scale down into a much more lower time frame, like our 1 hour time frame, to see how participants in this market has been reacting to the zone since the beginning of this week. So now with the information we've gathered here on the daily time frame, things will now become a little bit more clearer when we scale down into the 1 hour time frame. Now on the 1 hour time frame, this is what we have seen here. We have seen a range right now as price action still looking very indecisive at this point in time, hereby revealing the uncertainty in this particular market. So personally, we will need price action to take out all the buys positions around the 15,285 zone to incite a bearish signal. Remember, this zone has been a very strong bullish buy zone since last week Friday, and in fact during the early hours of this week we saw how this area has been a strong buy zone. Now we want to see price take out the buy positions here for us to join a bearish move. So we are going to position ourselves right below the 15,285 to capitalize on a selling opportunity in this particular market. So that is how we are going to join any bearish move at this area. However, if price action does not break down and instead it continues to find higher highs, well, you know how we do it in this community. We also want to keep tabs with the opposite direction too as well. So if price will find higher highs here, then we want to position ourselves above the key level at the 15,450, hence we might likely be seeing a bullish momentum. Now, one thing we should also take note here is that we have been noticing higher lows too. So is this going to turn out to be an uptrend continuation? So let's bring out our line chart and connect the series of higher lows here to give us a trend line to work with. So we have a trend line right now. So we bring back our candle chart to do some adjustment here so that we can have it capture all the pivot lows in this area. So we have a beautiful ascending trend line going forward. So what this simply means is that as long as price remains above the ascending trend line, we shall feel comfortable buying the USTech100. So we can position ourselves above the 15,360, breakout retest. Remember, you want to see a retest before joining that bullish move, after which we can have a buy stop order above the 15,400 to capitalize on an uptrend continuation. However, if price breaks below the ascending trend line, retest of structure, then we want to be joining at continued selling pressure, then have a sell stop order below the 15,285 level to maximize the potential of that bearish move. So our center of focus basically is around between the 15,360 and the 15,285 for today. So you do want to be marking out these levels on your chart, as you will be needing it as a reference point to guide your trading activity for today. So if you have any questions regarding the current setup we just talked about, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions, and if you can take that time to mark out those levels on your chart too as well. All right, so in the absence of no questions, I want to assume that we are all on the same page and that my explanations are quite understood. So with that being said, we shall be moving into the next financial assets on our watch list. So the next instrument on our watch list for today is the GBPUSD. So on the GBPUSD, remember at the beginning of the week, we actually bought these assets, remember? So let's run through quickly what has really been going on in this market and how we are going to position ourselves ahead of today's trading session. Now, during the live session yesterday, the first thing we observed on the 1 hour time frame was the higher lows that gripped this market since last week Thursday, and in fact we were able to connect a series of higher lows here to give us an ascending trend line to work with for this week. And one of the things we agreed here yesterday is that as long as price remains above the ascending trend line, we shall continue to look out for buying opportunities in this market. Then in addition to that, we saw how price was initially confined within the 1.27640 and the 1.27150 level during the early hours of the week, giving us a range to work with. And of course, you know that we will need price to either break out or break down of that range to give us an opportunity to trade. But there was something interesting we noticed during our live session yesterday, and despite this bearish momentum we saw that as soon as price action tested the 1.27150 level, we begin to notice the resumption of buy pressure around that area, as we saw how difficult it became for sellers to break through that area. Now, the emergence of buy pressure around this area, coupled with the ascending trend line around that area, signaled a potential reversal pattern for us. So we were able to spot something that looks like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And you know, when we identify double bottom structures like this, the next thing we want to be doing is to confirm the neckline, which was duly situated at the 1.27435. And we agreed here yesterday that we are going to be buying above this area, then maximizing the potential of that bullish move by adding more positions at the breakout retest of the 1.27640. So yesterday we had two positions running, and in fact the first position moved about, how many pips was that? About 48 pips in our favor, while the second position moved about 27 pips in our favor before the bearish momentum began. And if you had moved your stop loss accordingly, just like we always preach here in this community, you must have been taken out with a modest size of profit, or at a worst case scenario, break even. So with a profitable start to the week, congrats to everyone who were able to take advantage of that trading opportunity right there. So now that we are going into the New York session today, how do we intend to plan our trades ahead of today's trading session? I already have a sell position triggered, but I want us to first of all scale up to the higher time frame so that we can have an holistic view of what is going on the GBPUSD, and then probably correlate the structure we have there with what we have on the lower time frame to have an informed trading decision. So let's go back into the daily time frame, and this was where we started our analysis for this week. Now on the daily time frame, the first thing we observed was the fact that price action was very bullish, as you will see, since the month of March. In fact, since the last quarter of last year, it has been very bullish, but we just took into consideration the nature of price action since the month of March. And to further buttress this bullish momentum, we connected a series of higher lows, hereby giving us an ascending trend line to work with. And in fact, this ascending trend line is going to be one of the major parameters that we are going to be using to guide our trading activity for this week. Now, in addition to that ascending trend line was this key level we were able to spot around the 1.270 area, a very strong psychological area considering the round figure of that price. And why this level is important at this juncture is simply because of how it has been a major determinant of price action since the month of May. Now look at what happened here in the month of May. This area was a selling niche, as we saw how it became difficult for buyers to break out of that structure at that point. And not until the mid-month of June we finally saw the breakout of that key level at the 1.27, and since that moment price action has been trading above this level. Now we saw a retest of the structure here to incite a very strong bullish momentum, but in the last couple of weeks price action dropped significantly back into that 1.27 area we identified earlier. And one interesting thing about the structure is the fact that the 1.27, the ascending trend line, and that demand zone around this area all share a beautiful confluence, making it a crucial juncture in the market where anything could actually happen. So at this juncture, the buyers have a tendency of pushing price to the upside, and of course the sellers also have a tendency of pushing price to the downside. So we had two scenarios figured out at the beginning of the week. One of them was, will price respect the ascending trend line one more time to incite an uptrend continuation, or are we going to see a scenario where price will break down both the ascending, the key level, to incite a sell-off in this market? Now, to be able to identify or make an informed decision around this area, we needed to see how market participants were reacting to the structure during the early hours of the week. And to do that, we would need to scale down to a much more lower time frame, such as the 1 hour time frame, to see what has really been going on in the last 24 hours. Now, when we scale down into the lower time frame, we begin to see things more clearly. Remember, we saw a range identified yesterday, and of course, we took advantage of a bullish momentum. But one of the things we noticed here was that as soon as price action tested the 1.279, we saw selling pressure resume there again. And this has been consistent since last week. As you will see, last week Friday, despite the strong bullish momentum, we saw that price got into this area and buyers found it difficult to break through that area. The same thing has been going on in the last 24 hours. We saw what happened during the New York session. We saw another selling pressure around this area, which further emphasized the strength of the sellers around that area. Now, with this situation going on here, we might likely be seeing the transition of price action into a reversal pattern on the 1 hour time frame, as if this selling pressure around the 1.27 persists, then a breakdown of our key level, the breakdown of this ascending trend line will likely be welcoming selling opportunities. So the breakdown of this trend line will now signal a momentum shift. Now that is why I captured this bearish momentum here, and if you are taking advantage of that move, well done to you for being on standby to catch that one, as you will be currently running with about 25 pips in profit at this point in time. Well, for those who had missed out on this opportunity, it's okay. I still think the market will present with more opportunities to capitalize on this downtrend if that is what is going to happen today. So now looking at this from a technical standpoint, whenever price action breaks down a key significant structure such as the ascending trend line and the 1.2427435, we expect that at some point in time price is likely going to come back to retest the structure where continued selling pressure around that area. In fact, we want to see signs that buyers are finding it difficult to climb back above the ascending trend line for us to join a bearish trend continuation. So if that happens, if you had missed out on the first sell position, let's see if the market will present a second chance in the form of a retest of the structure broken to join a bearish move to the downside. So let's keep this in mind and let's hold on to see how the market will play out below the 1.27435. And if instead price does not retest the structure and it continues to go to the downside, then a breakdown retest of the 1.2700 level will welcome more selling opportunities in this market. So as long as price remains below the 1.27435 and the ascending trend line we identified here, we shall remain bearish in this particular market. So anywhere below that structure, let's look out for patterns and structures that will support the idea of selling the GBP USD. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials that the buyers have. Now, if we consider what has been going on since last week's trading session, we've noticed higher lows here, and in fact, since the beginning of the year, the pound sterling has been rising, and this is as a result of the high interest yield on the GBP compared to the US dollar. So the GBP has about 5.5% interest on investment on the pound sterling, while the dollar has, I think, 5.0%. And because of this situation, we have been seeing a very strong bullish momentum on the pound sterling. And with the situation we have here, we need to be very, very considerate of the buyers too, as we could still see room for a bullish momentum despite the continued selling pressure around this area. Now, what do we want to look out for on this chart that will make us feel comfortable buying the GBP USD? Well, personally, I would rather see price action break out of the 1.27980 level, taking out all the sell position around this area to give me a level of comfort to join a bullish momentum. And in fact, a retest of structure will further give confirmations that buyers are likely going to be pushing price to the upside. However, we can capitalize on a bullish momentum even before the breakout happens. For instance, if price breaks above the 1.27640 retest of structure and we begin to see higher lows and higher highs, we can actually join before the breakout of the 1.27900 level happens. So if that is going to be the case, we join that bullish move and then maximize the potential by adding more position at the breakout of the 1.2790 level. So you will agree with me that this ascending trend line is going to be a major determinant of where price action is likely going to be going for today. So as long as price remains below the trend line, we look out for opportunities to sell, while if a breakout of the trend line happens to the upside, then we begin to look out for buying opportunities in this market. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So if you have any questions whatsoever as regards to the current setup and what I've explained so far, feel free to let me know in the comment section, and I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, and you can as well use that time to mark out those levels on your charts. All right, so I see a couple of comments here. I saw 4198 who is asking that 4198 and 269 are asking that what do we do here? Well, we are technical traders and we come here as a community in anticipation of the New York session. So what we simply do here is to analyze the financial market. So we have a bunch of financial assets on our watch list for this week, which we have been monitoring since yesterday. And today we come in here to review how well the asset has been doing and then how to manage our current position, while we also strategically position ourselves ahead of the New York session. So what we're simply doing is analyzing the market structure to see where we can position ourselves for either a buying opportunity or a selling opportunity. So that is simply what we do here, 198 and 269. So that's what we simply do here on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So that is that. So in the absence of no questions, I want to assume that we're on the same page. So we shall be moving right into the last financial assets on our watch list for this week. So the next instrument on our watch list for this week is the XAUUSD. And on the XAUUSD, yesterday we had the buy position triggered. We had about 100 pips thereabout before the bearish momentum began. And remember, we identified a simple setup on the 15 minutes time frame, which we agreed here that we are going to be using to guide our trading activity. So I want to scale down into the 15 minutes time frame so I can share with you what we saw during our live session yesterday and what we said we are going to be doing with our structure. So the first thing we observed here on the 15 minutes time frame was our price action was very bearish. So we connected the series of lower highs to give us this descending trend line that you have on your screen. Then we noticed that as soon as price tested that $1,933.50 level, we begin to notice the resumption of buy pressure around that area. And because of this scenario here, we said we are going to be positioning ourselves to buy at the breakout of both the $1,934.50 level and of course the descending trend line to join a bullish momentum here. So with this situation here, we saw price breakout, and in fact, it gave us a second chance to join. So we saw the breakout retest multiple times to join this bullish momentum. And in fact, we had multiple entries. Remember, we indicated these levels at the $1,936.50 level, the $1,938 area to capitalize on an uptrend continuation. So we were able to scoop in roughly 100 pips on the single move on the XAUUSD before the bearish momentum began here, taking us out of all our positions with a modest size of profit. And for those who moved their stop loss, you definitely would have taken some profit on that one. So since yesterday, price action has been caught within a limbo. As you will see, price action is currently range bound in the last 24 hours. That is between the 1,938 level and the $1,931.50 area to emphasize the level of indecision in this particular market. So right now, there is an uncertainty in the market as majority participants are yet to find a headway on where price action is likely going to be going for this week. Now, while I was trying to decipher what we could look out for during the New York session today, one of the first things I observe here is this descending trend line. So despite the fact that we have a range, we can see obviously that there is a descending trend line after connecting the series of lower highs since last week Friday. In fact, we have a couple of trend lines to work with, and you know how we do it in this community. As long as price action remains below those descending trend line, we shall feel comfortable in our sell positions while we also look out for more selling opportunity. But there is a caveat to the structure which is negating that idea. And one thing here is that sellers are still struggling to gain that momentum. As you will notice that since yesterday, around the $1,931.50 level and the $1,930 area, we have been seeing that as soon as price gets into this area, sellers have always struggled to break through that level. So look at the first attempt here on Monday. We saw what happened here during the during the early hours of today, and in the last couple of hours we've been seeing buy pressure resume around this area. So it's a clear sign that sellers are indeed struggling around this area. Now, if we are going to consider selling the XAUUSD today, we will need to see price action take out all the buy positions around this area. That is, take out all this buy position. Then we can now start considering selling the XAUUSD. Now remember that we are not going to be getting too excited here, as we would need further confirmations before we jump into any sell position. And to do this, we will scale down into our lower time frame as soon as price action breaks down the 1,930 level. And once we see the breakdown of structure, we look out for signs that buyers are finding it difficult to climb back above the 1,930 level, which would reflect on the chart as continued retest of structure, selling pressure below those areas before joining any bearish move. So let's be on standby to capitalize on that move at the breakdown retest of our key level at the 1,930 level. So that is how we are going to be selling the XAUUSD today if the market presents that opportunity. However, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We don't want to ignore the potentials of buyers too as well. Now remember, let me scale up into the higher time frame. There is something here we saw at the beginning of the week, and this is what we have here. So if you look at the daily time frame here, it is quite obvious that price action has been very, very bullish. And when we connected the series of high and lows here, we had this ascending trend lines to work with. Now, if I zoom into the current structure, that is taking into consideration what has been happening in the last 1 month, you will see that 1930 level, which I said we are going to be using to guide our trading activity for this week. So this is our key level for the week, and you know how we use our key levels. As long as price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. And not unless we have a breakdown of the key level can we be thinking of patterns and structure that will support the idea of selling that asset. Now look at this key level here and look at the ascending trend line. Very beautiful confluence we have there. And since price action has come into the structure since the beginning of this month, we have been seeing buy pressure around that area. Now that brings up the question of price respecting the ascending trend line to push price to the upside or breaking down the 1930 to incite a sell-off. So you would agree with me that we are at a crucial moment in the market right now where depending on how price action reacts to that key level, how the 1930 will determine where our next line of action will be. So I needed to show you what things are looking like on the higher time frame so that when I explain on the lower time frame, we shall all be on the same page. So going back into the 1 hour time frame right now, so like I said earlier that we will need price to break down the 1930 and retest it to give us a confirmation to sell. And the only condition that will make me want to buy the XAUUSD today is for price action to break out of those descending trend line and in fact break out of the 1938, which of course shares a confluence with one of the descending trend line. So a breakout retest of structure should be what to look out for to join an uptrend continuation, while we have our stop losses anywhere below the 1930 to give enough room for any volatility that could happen around that area. So let's mark these levels out on our chart. So we have the descending trend line, which is one of the parameters we are going to be using to guide our trading activity for today. So a breach of this descending trend line should welcome opportunities to buy the XAUUSD, while the breakdown retest of the 1930 will welcome selling opportunities in this particular market. So let's see how the market will play out in the next couple of hours, as this will now give us an insight into where price action will be going. So you do want to be marking out these levels on your chart, as you will be needing it as a reference point to guide your trading activities for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So it has been a wonderful moment with you guys this morning. And we were able to attend to 4 financial assets, which are the USD JPY, the XAUUSD, the GBPUSD, the XAUUSD, the USTech100, and of course the USOILSPOT, where we were able to review our positions on them and of course identify simple setups that we are going to be using to guide our trading activities for today. And in fact, I am confident that we are well equipped and ready to capitalize on any of these opportunities as we continue to monitor price action. And for those who are joining us for the first time today, I hope you are able to gain 1 or 2 things from what we discussed here. And trust me, the more time you spend with us, the better you get to understand how things works and be able to use the information you have gathered here to make your independent trading decisions on your accounts. So it's on this note, I wish you all the best of luck today. And I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset has been doing and how we are going to be preparing for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.